Thank you for joining iMeet. When you hear the tone, you will be the 15th person to join the meeting. This meeting is now being recorded.
Hey everybody, good afternoon. This is David Blake with the Tuesday Tech Talk. And if you're new here, we're going to quickly just go over the couple of the indexes, look at some of the different sectors, see if we can determine some support resistance areas, and try to figure out what to do in the market over the next week or so. If you're new, I usually talk about 20-25 minutes, and we try to open it up to questions about different stocks or about the market, anything you want to talk about. And there's a little thing in the bottom left-hand corner of your screen that you can click on to type your questions in, and we'll try to get to them later on and even look at some different charts for you. We got a lot of feedback on the demo of the new site last week. We really appreciate you taking the time to tell us what you think, as well as some of your suggestions. We'll go over all those things. A lot of good feedback, so I thank you again for that. So we'll jump right into it here. Don't have a real lot to talk about today, mainly because I'm still bearish on the market. We had a nice big rebound yesterday, whether it was a sigh of relief from the North Korean tensions subduing a little bit, or what it was. I'm not sure. It was the start of something new. Today we're kind of flat, trading a little bit mixed. However, like we have in so many of the last 2 weeks, you've got the Dow flat to sometimes slightly up, and you've got 2-to-1 declining issues to advancing issues, and you got volume is 2-to-1 to the downside, and that's both on the Nasdaq and the NYSE. As usual, you have a couple heavily weighted stocks that are holding the Dow up. Today it's the financials, Goldman Sachs, and I believe JP Morgan. We'll look at what else is going on there. But like I said, we're going to still keep our, we still have a -5 on the CTI. It's possible that we could go to a bullish call this week. It would depend on what the momentum index does. What we need to look at also would be if the Dow Jones would trade below 21,842 on an intraday basis, or if the S&P 500 can come down and test the 2437 and trade below that, that would extend the CTI as negative count out a little bit further. So that will be a big thing. If we see like Thursday or something like that, we see a little bit of pullback where we're down 100 points or so, know that we're probably going to extend the CTI call. That actually, when you make a lower low during the week, during intraday week, if that would go on for the next 5 weeks, that would extend that cycle out for another 5 weeks. So we don't just because it's time for the CTI to go positive, it won't happen if we continue to make new lows. So that would probably that'll result in another reset if we do. Okay, the momentum index last week fell to a -12 on Friday. That points that just about every indicator we joined together on this with the momentum index and market posture was underperforming the Dow Jones. We had all the McClellan oscillators and everything go negative last week. Sentiment was also a -1. Not too bad, but just still a little bit too bullish. We had the percentage of investment advisors still up above 55. It pulled back a little bit, and the bears went up a little bit, but not enough to make a difference on that. So here's the Dow. As you can see, it's still nothing wrong with this chart at all. It still came down here just a little bit below the 50. Didn't even come down to test the 50-day moving average. So everything still looks bullish. You have a little bit of a higher open today. Now you're kind of vacillating between break even and up a point. If you go over here, we look at the NYSE advanced decline line from last week. This is the last week and a half or so. It's a pretty good pullback. I believe we had something like we lost about, almost 4,000 units last week, which shows you there were just a few stocks that were outperforming. The rest of them were headed down. I think we talked last week. We had probably something like the last week or two where the Dow was making new highs almost daily. We had more declining issues and advancing issues. So a lot of negative divergence there. We had a good positive day as far as internal breadth last week. However, that divergence is rearing its head up again today, again with double the declining issues and all. Here's the new 52-week highs and lows. You saw this thing spike up here on Thursday and Friday of last week, but we're making new highs, more new highs and new lows. Now that hasn't happened since I think the first week of March when we had a little bit of a soft market on that also. So again, this negative divergence is something to keep an eye on. Here's the S&P 500. Not quite as strong as the Dow in the fact that we broke the 50-day moving average last Thursday. Stayed under there on Friday. Okay, then we got the bounce back here from the on Monday. Not a great bounce, but it was good. It got us above the 50. Now we're starting to head back down. We're at 24.63, 24.64 right now. And the number to watch on that is 24.37. So if we get some selling coming in, keep an eye on that. A little bit of negative divergence still in the MACD and the RSI 14. It briefly broke below the 40 level here. This needs to come back above 65, 70 before it's going to signal the uptrend is still in place. Accumulation is still positive, but again, a little bit of negative divergence in some of the indicators on the S&P 500. Now, I wanted to show you this next chart. This is the S&P 500. This chart doesn't quite look as good. This you came down here, you held support at the 100-day moving average. You have now a little trend line support there now that. And this is the S&P 500 equal weighted index. As you can see, you have a little bit more negative divergence going on with this. You're not, you're kind of going sideways across here. You had that little spurt there, then you're coming down here. Again, what's going on with these indexes is the heavily weighted stocks, and whether they're financials or in some cases the big tech names, are holding this whole market up. That's not a sign of strength. And the big red flag about that is if they begin to falter, it'll induce more selling. It could actually make the indexes overshoot to the downside, as they probably have to the upside a little bit. But you can pull that up at different sites. It's called an equal weighted index rather than the regular one that's weighted with by market size and market cap. So this has, again, it shows a little bit more negative divergence. Here's the Nasdaq, and you can also find the equal weighted Nasdaq chart too. Kind of playing with this little triangle thing that we've talked a little bit about. Here's some more negative divergence in the indicators. They're not quite ramping up to look like they're going to push out to new highs. We're basically flat. Well, down 5 points, basically flat again today. You had some big name tech stocks that are outperforming as we usually have. But now this is a little bit different. This is the Nasdaq AD line. That we consider this a leading indicator of market direction. And if you go along with me on that, this doesn't seem like we're like a chart that's getting ready to break out to new highs. A lot of selling off on that. Probably lost another 4,000 or 5,000 units on the Nasdaq too. We're down another 1,000 units today, so that'll take this will bring this down to about here again. So keep an eye on this. That was a negative when we broke this kind of support level over here. We'll see what we can do with that. Also on the as far as internal breadth goes, we were making new lows and new highs also. One of the things I follow on a daily basis is I try to see what how many stocks are within 1% of a new high versus 1% of a new low. Anything above 20% is usually a pretty good breadth going forward, or good participation when we're pushing higher. That on the stocks that we follow has gone from 26% of the stocks followed were within 1% of a new high about 2.5 weeks ago. That got down on Friday to 11%. And about 2.5 weeks ago, we were at 10% with stocks within 1% of a new low, and that rose up to 14% on Friday. So now, with what we follow as far as the number of issues, we have more stock within 1% of a new low than high. So that's had some strong deterioration just over the last 2.5 weeks, and that's also another red flag for us. All right, here's the Russell 2000. This was actually one of the big decliner last week. It went down about 4% over the last week and a half off of the highs from here to here. Found support at that 200-day moving average on Friday. People still wanted to wait to see on what happened over the weekend. No bombs fell, so we got a nice pop in that, nice rebound. Didn't quite make it to the 100-day moving average, and today we're off about 8 points to 1385. So we've come down here, as you can see over here on the side, which is also a little bit of a red flag again. We'd like to see the small caps breaking out, but they're kind of in this sideways pattern again. They're going to run into resistance up here around 1410, 1415. To the downside, if we break that 200-day moving average around 1340, below that, it's going to go all the way back to this 1310, which would pretty much wipe out all of this year's gains. So again, negative divergence on the Russell 2000. It's not a chart of strength at this point. Here's the Dow Jones Transportation Index, which we've been watching closely. You have a double bottom over here, which is you can say that that's a positive. We did break briefly below the 200-day moving average, but a double bottom when they're this close together doesn't have the same significance as if we had something here and then we came down over here. You have a couple months separation in double bottoms or double tops. It's much more significant than if you just do it over a period of a week or two. So we are seeing some improvement in this. Today we're the bounce back is you're up about 7 points, so it's kind of treading water on here. We got to get through this 93.40 to break through the 93.64 on the pivot point to break the pivot point on that to see if we're going to be back in a date in an uptrend. But it's nice to see that rebound and kind of capture over some of these moving averages. But we still got to get over the 50 on the transports, so keep an eye on that. All right, the best performing sectors last week, we only had two of them. This is going to go from Tuesday through today. The consumer staples were up 0.5%, and then we have technology, which is up almost 1%. A lot of that was mainly due to yesterday. As far as the downside goes, what was leading the market down was energy, and also I lost my notes here. It was energy and I don't have it right here. But anyway, let's take a look at this consumer staples sector just to see if we're in a position of strength. You've had this sideways range over here where you broke out of it, came right back into it, and now we've gotten up here and we're flirting with the top of that range again. One thing that's troubling on this is, as you can see this, a little rise up here, pull back, another rise up here, we pulled back, and then another. It's called a head and shoulders pattern, and it's usually a topping pattern. If you take this and measure from here to the neckline, which would be this area right in here, if this comes down here and breaks through this, you're going to get a pretty good pullback in here, and it would target where we were back at the beginning of the year. So keep an eye on that. Now, we're not getting confirmation or negative divergence in the indicators that point that this is going to be anything more than continuation and then a break above this little descending trend line. But it's something to be aware of if the market starts to pull back and this breaks these lows from the last few weeks. And now here's the technology sector. And again, we're going a little bit sideways. Had that big pullback down in here towards the pivot line. Basically kind of touched the 50-day moving average, bounced off of that. Today we're let me see what the XLK is today. We're basically flat today on that, so no worries with that. A little bit of negative divergence coming in here as we're getting ready to break out a new high. It's not being confirmed by all the indicators, so that's something to keep an eye on. And again, what I suspect, yesterday you had that almost 2 3/4% move in the semiconductors. A lot of it was NVIDIA, and some of those as a bounce back. If this doesn't push out to a new high, you want to keep an eye on it and see if we can hold this 50-day moving average again. All right, now, had a couple questions about what we would look to buy if this was the end of the pullback and if we're going to start working our way higher again, which I'm not convinced we are. I think you still want to wait a couple of days to see if we're going to get another little retest of the 50-day or so in here. But what is actually showing some relative strength would be the financials. XLF is the ETF you can follow with that. And this would be, we've talked about this several times in here, that if we get any kind of correction, you want to start to pick up some of the financials and then add to them again on the on pullbacks. Now that would also lead to you're getting a little bit of if we we as of yesterday we were kind of had the interest rate hike off the table in September, but now they're talking about if we get a 3% GDP growth in July and August, that could bring it back on the table. That caused the 10-year yield to jump up from about 2.2 to about 2.2728 or 2.28 this morning. We've backed off of that a little bit now, but kind of keep an eye on that. If they start talking about rate hike maybe be on the table again for September, that would also benefit financials, and you can see those break out to a new 52-week high. So keep an eye on that. Now some of the local banks, the Bank of America, Wells Fargo doesn't look very good right to me, but Bank of America, J.P. Morgan looks a little bit extended. Citigroup looks pretty good, and also the regional banks look good too. Now, we said that energy was the weak component last week. We saw it over here. We started to get that rise up here and some accumulation. Got a little bit up to the 100-day moving average, couldn't bust through it, and turned around, and we're back into that downward channel. We want to see if we're going to hold these lows right over here. Today we're off again, but it's kind of selling in here around 47.40. If we get any more weakness in oil, I think $45, which would be right around here, would be the place to hold. Here's crude oil right here. Again, this is the 45 area right in here. I think that's probably where we can go now. And it's just, you're still kind of in the back of this pattern where you're making lower lows again, or lower highs, and if this comes down, you'd make another lower low, but I don't think that's going to happen. You're seeing some good accumulation here in oil. You don't usually see this if you're going to start making new highs. This is, when you see a big spike like that, that means that institutions are buying that. So again, I would expect to see this thing go a little bit sideways in here, maybe a little bit more of a pullback. 45 would be the bottom of it. That would be close to the 50-day moving average. At that point, you could probably nibble away again at the oil stocks. I don't think they're going to fall out of bed like they did before. Okay, here's gold. We were talking about gold the last couple of weeks. If we could break above 1285, you could probably get a run to 1300. Break through that, your next target's going to be 1310, maybe as high as 13.25. We ran into resistance after the weekend. Of course, you kind of expect to see that. That we didn't have any bombs drop or anything like that. We got to where our target was, backed off. We'll see what happens here over the next couple of days to see if anything ratchets up again. But gold on here, I would not be buying it right at this level. We get a pullback down here around 1255, 1260. I would go ahead and get back into it, or if you see it break above the 1300 level, you can start to nibble away again there and look for a shoot to the 1310, 1325. And again, here you see the accumulation going on in gold. This is solid buying going on to that. But again, if we're going to if North Korea kind of backs down, this could probably come a little bit lower. All right, one of the things that I do, again, I had some questions, and it's going to be a little bit shorter here, about what we do as far as what I would be looking to buy at. And one of the things that I do is run a portfolio called, it's called the sector industry portfolio. Last year we were up about 28%. We're up about 14% this year. What I do is I go into the ETF center and I punch all the different sectors that we have, which will include the industries in that sector. And then I kind of sort them out by relative strength, which you can do this by yourself. And when I came up with this for this week, I ignore usually the pro ETFs because they're double and triple leverage on these things. But this will give you an idea of what industries and that are in these sectors are outperforming. Now, if you go in here, here's the idea generator. Ones that I have added in the last couple of weeks to my little portfolios include the One of them is TAN, and some of these are, while we're going sideways, you're going to notice that these aren't some of the high-flying ETFs and industries that I'm adding in here. I think that's probably because if we start another leg higher, it's going to be more of an industrial or cyclical stocks that could lead. You know, the aerospace and defense, maybe the steel, some of that kind of thing. So what we added in here recently was TAN, which is TAN, which is some of the solar stocks. We're going to look at a couple of those as some low-priced stocks. We could get a little trade on that. We also added IAI, which is the broker-dealers. We also added SLX, which is the steels. And that's the only three I added recently. But if you look at a couple of these things in here, and I'm sorry I'm jumping around on this guy. I got a little bit tied up today. Now here's TAN. This is the TAN. This is the ETF for the solar group. We've had a nice little rebound over here. A little bit of a pullback over here in the last couple of weeks coming down here. It hasn't pulled back enough yet. But some of the stocks that make up for this are looking pretty good in here. They're low-priced stocks, except for this one. This is First Solar, FSLR, marching higher. We had some pretty good accumulation down here. Some positive divergence in the indicators. Another one that I like in here is SunPower. Got ahead of itself over here. We came back down on a retest of the 50-day moving average. A nice trend going forward. Some nice accumulation. A little bit of a pullback on this last week when we started to have a correction. But SunPower looks like we could buy this thing, especially if it would get down here to the 100-day moving average. I was actually kind of waiting to see if it would break through this to come down here, but it didn't. So I would look to the next couple of days, if the market can start to firm up a little bit, I might look at that one. Another one in here was JKS. This is Jinko Solar. You can see some consolidation going by sideways. Nice accumulation note down here. This might be one in here, if you could pick it up around this 26, 27 area, that we could get a breakout to the upside. And finally, here's a small one called Run. I'm not really familiar with this. It's called Sun something. It's RUN. A little bit of sideways consolidation action. Good accumulation again on this thing. You came down here to the 40 mark on the 14-day RSI, and we're going back positive momentum again. Those are just a couple in that industry group that is starting to outperform the Dow. I think the relative strength on TAN was it's outperforming the Dow by about 14% right now. Another area that on these things, here's an XLI in the industry, one of the sectors that I think we may get a little bit of a pop. We sold off in here. Now we've come back up. We're trying to hold this 50-day moving average. Good accumulation. This would be the steel stocks, some of the defense and the aerospace stocks that are moving up. If we break above this little descending trend line, that could be one of an area that I think could lead us further. Here's SLX, which is the steel industry group. You came over here. We sold off a little bit here going sideways. But again, look at the accumulation down here. This is what you want to see. When these things are kind of going sideways, you want to see accumulation happening. Okay, we came down here in the 30-day stochastic. We're holding that 50-day mark. We want to see if that's going to hold. We're also holding right around above 40 on the 14-day. Now, as far as this is U.S. steel. This is a little bit negative divergence, but this is a nice pattern walking up on this thing. We're kind of walking up the 50-day moving average. We're struggling here with the 100-day. If we can crack through that thing, we might get a little bit of a break in U.S. steel. You can see this gap down here. You could get maybe a trade up here to that 28 region for this 23 to about maybe 27, 28. You want to see this pick up the accumulation. Here's WOR, Worthington Industries. Again, you're starting to see accumulation in this steel stock. We broke below 50 on the 30-day, which I don't like, but you did hold the 14-day. You held above the 40 area. So watch to see if we can get a little bit of a bump up in this thing. This might be one to take a look at in the steel sector. And here's Steel Dynamics. Really stuck in a range, but again, we're having some accumulation on this thing. You're getting oversold on this. If we can bounce across the 50-day moving average, STLD could be one that we could get a little bit of a trade of. on and get it back up here to the top of its range. Again, that would be, you want to watch the XLI, which is the industrials, move on that. Okay, another one I added, I forgot about this one. This is IXG. It's a global financial industry group. Again, you see the thing market moving up sideways, accumulation over here. A little bit of a pullback last week, but this thing should start to go. Not only are you getting like the Bank of America's in this, Wells Fargo, J.P. Morgan, all of those, but you're also getting some of the international banks, which you may want to look at as those economies are improving. Stocks like HSBC, which is based out of England, but they do probably 60% of their business overseas, especially in China and the Southeast Asia. They pay about a 6.5% dividend. Bank of Australia, with the commodities rising, that the Australian economy is doing well. That's another stock you could look at. Here's the ITA. This is the U.S. Aerospace. Look at this thing. A lot of this is due to Boeing. However, there are some stocks in here that you can look at that aren't too overbought. Lockheed Martin's overbought, LMT, but maybe take a look at Raytheon, RTN. They make all these Tomahawk missiles. It's had a nice run up due to the North Korea thing, but especially if we would go to some type of war or have some kind of clash, Raytheon would move up. Another one is L3 Technologies, LLL. Nice looking chart on that thing. So those are just some ideas that, here's the LLL, which I like right here. You just kind of broke out of this ascending triangle. You came up here. It's not a cheap stock, but it's something that you could look at. And I think that if you're looking to buy some things on pullbacks, those areas that we just talked about could be some spots that rather than just plow right back into the FANG stocks and hope you're going to ride those. I don't think you're going to see the relative strength in those going forward here for a little bit. They've had a heck of a year already, but I think if the economy is going to start to get a little bit heat up a little bit more, you're going to want to own some of these manufacturing stocks. So go ahead and get your questions in there. I'm going to go try to wrap it up. We have one in here right now. There's some reports about a tariff on imported solar panels, which could hamper growth. I've read that. That's not going to hamper all of them. So I think if you look at the charts on them and see what's looking good, and try to get some of the ones in here, because you're also getting a lot of tax benefits. The companies in here that are supplying, they're working with the solar power thing. So like I said, I think SunPower is one that I would look at. I think we can see that they've gotten beaten up pretty good, and you're buying these things at a real discount. Whereas as soon as you start to see things happening, you're going to see those things start to pull ahead. One of the things people talk about, why isn't Ford and General Motors going higher? Some of these car stocks. Or why isn't energy going higher? Why is crude struggling? When we looked at the long-term charts on those things, you can see where we have, where you see a breakdown in a chart like we did on energy a couple years ago, and how it has not been able to reverse itself. A lot of that is because things are changing. People aren't driving as much. You're not using as much gas. We're not using as much energy. And these solar stocks that they're getting cheap enough now where it's not going to cost that much more to use the solar power, and the wind power, things like that. It's going to go, and the fossil fuels. That's why you don't see the big bang in like some of these stocks, like the Ford and GM. I mean, you look at some of these electric cars are going to be, whether it's 5 years or 10 years. That's what we'll probably all be driving those. So you can't fight the trends on some of these. Okay, where's the ETF idea generator? That is in the Pro Market Edge, and it's also going to be on the new beta site. You can find that in there. So I hesitated about putting that up because, again, it's a new feature that we're going to add up. But if you go into just a regular, ETF center and just look at all the specialty ETFs, you'll find which ones are TANs in there under alternative energy, things like that. So you can pull those up and then put them in a stock watch list and find out which ones are going to have the strongest relative strength. What I often will do after that, I keep a whole list of of the different industries that I've gone through by either Yahoo or Microsoft or something like that, where I get a list of all the different industries, and I probably have 100 something that have, like retail and things like that I can follow on my stock watch to see when they're getting upgraded and downgraded. Okay, we've got about 35 minutes again. If there's no more questions, we'll wrap it up. I'm sorry I wasn't that prepared today. I was trying to decide what to do. I was hoping we weren't going to go, have this little bit of correction with all this negative divergence showing up over the last couple of weeks, and then in 2 days we go back to making new highs. I don't think that's going to happen. Again, the negative divergence that we've seen over the last 2 weeks tells me I'm not ready to go all in, especially with today's action after that big move yesterday. And as of right now, we're still 2-to-1 to the downside on declining issues versus advancing issues. The Dow's trying to kick higher. It's up 8 points. That's not a market that you want to be in here buying anything that everything that's that you like. So I would not be chasing this over here the next day or two. Again, the big thing about what you want to watch is that 21,842 in the Dow and 2,437 on the S&P. So if we trade below those interweek, this cycle will be extended, and it could be extended for a few more weeks. But don't be chasing this market where you have twice the number of declining issues as you do advancing issues. That's just a matter of being overweighted those things, and when they start to roll, it's going to turn this thing into a couple ugly days where you have 150, 200-point down moves. Okay, again, thank you for taking your time. I hope you got something out of this. Again, I wasn't as prepared as I normally would be, and I apologize for that, but I do appreciate you taking time out of your busy day to join me and try to get something out of this. I will see you next week.